again, guys. Thank you for being here with us today. Can you give us a quick introduction about what you do? Glauber?
Ladies first?
Yeah, we can start with you.
Okay. So pleasure to meet you guys. Glauber Mota, I'm CEO of Revolut in Brazil. We are bringing to the region one of the most exciting innovation apps and financial services for here. Very glad to be here talking about fintechs Frink because as a company, we have experiences the ups, downs, and comeback of the financial investments through fintech. So I'm glad to be here with you today.
Hi, my name is Amee Parbhoo. I'm one of the managing partners of Accion Venture Lab. We are a leading early-stage global fintech fund. So we invest across Latin America, Africa, Southeast Asia, and the United States exclusively in fintech. So we're very much feeling the ups and downs of the fintech market.
Hi, I'm Juan Fantoni, co-founder of Pomelo. Pomelo is a fintech infrastructure company. We provide the technology to issue cards, debit, credit, and prepaid cards for banks, fintechs, and any company that want to issue a card in Latin America.
Okay. So guys, let's start talking about the current state of fintech funding in the world. We are seeing a decline of investments in the recent years, especially when we compare it to the explosion that we saw in 2021. But recently, we are seeing some bigger deals being made. What does this current moment tell us about where the sector is heading? Do you think we are in a moment where we can see again a new wave of investment happening, or this is a fundamentally different moment? Aim, should we start with you?
Yeah, happy to start with that. I think we're seeing a sign of the sector maturing. So that's why we're seeing larger rounds happening. Fintech, we've been investing for 13 years in fintech. This, and when we were getting started, people were barely using that word. I think now, a lot of those companies have matured, have scaled. You've also learned a lot about what works, what doesn't. And so I think it's natural that this is the point where we're seeing things like consolidation happen in the sector. We're seeing a lot of these companies really getting to the point of true scale, going global with their models. I mean, it's a really exciting time for the sector. But I don't think that means we'll see a drop in early stage investing. Fintech is such a massive space. Financial services is so prime for still being disrupted and to see more technology and being leveraged to reach the scale that we need. So I think we'll continue to see new innovation, which we're quite excited about.
Yeah.
Your company, you guys started in 2021, right?
Yeah.
During the explosion. How do you see the difference now?
Well, what I would say is 2021 is gone. That's not coming back. That was a one-in-a-lifetime situation for fintech. Some of the companies like Pomelo, we were able to leverage that. Back then, we raised around $50 million, and that allowed us to really build a company that was able to navigate through the hardest of times. I also think, VC is a market. The last couple of years, VCs were not investing in fintechs, but fintechs were not raising because they had a lot of money, right? Now that there's a different moment, and I think it's more of a normal situation, right? Where you have companies that have good fundamentals will be able to raise, probably at a different valuation or different multiples than 2021, but probably at a more healthy situation. I would say it's a great moment for good fintechs to build and raise money.
So to add on that, more than interpretation of facts, let's get to the data, right? From the peak in 2021 to 2024, we got a drop on fintech investment of about 45%. It's a big drop. But if you look for the late-stage fintechs and more mature business models, actually, it rose like 30%. So it's not that all the investments are gone. They are just being a little bit more selective. If you translate that for Latin America, then it's even bigger, the raise. It's going to be about between 65 to 72%, depending on the way you count, a rose of investments and new innovative fintechs raising money in the region. And it's not anymore because like some new idea or big appetite for investments happening, but because here in the region we have more unrealized opportunities because there are new infrastructure coming, there are new ways of payment, there are new technologies arriving, and we are not anymore in Latin America replicating models that worked in the US or in Europe or other places, but leveraging on those and evolving, boosting, using local infrastructure. Okay, let's take the case of PIX, let's take the case of the open finance, bringing less barriers for newcomers, business models reinventing itself, and then, of course, the money flows. And that's why Latin America is actually in this spring on the fintech landscape.
Yeah, this is very interesting because globally, like the investments in fintechs are declining, but as you mentioned, like Latin America is taking a different direction. And Juan, you come from Argentina, you are doing business there. How the Latin America compared to different regions, why are investments working here?
Yeah. So I think fundamentally what fintech solves is it gives a customer a better experience, and it dramatically lowers the cost of serving a client. All over the world, this makes a lot of sense. But in Latin America, it's fundamentally and really needed. In other parts of the world, we're replacing stuff. In Latin America, this came to serve a whole lot of communities that were completely underserved. And that stays the same. Even if we see markets goes up and down, the need in Latin America is huge. And that, I think, it's the only way you can sustain business. And I think the VC market have realized that. And they kept investing, even if in other countries, fintech started making less sense or not as much. And I think I wouldn't say we have solved that for Latin America, not even close. So the future is also bright going forward for fintech.
I mean, how do you see the region in investments?
Absolutely. I mean, again, we invest globally, so we're seeing the trends of fintech investing across Asia, Africa, the United States, and LATAM. And what's really exciting about the region here is, it is the absolute massive need among, if you're looking at small businesses, how they're being served across financial products, if you're looking at gig workers or, individuals, micro-entrepreneurs, they're massive sectors that are completely overlooked by global financial systems, regional financial systems. I also think what works in the favor of the region here is the regulatory environment, the infrastructure, the digital infrastructure that's been built in a place like Brazil. Being able to grow on top of PIX creates all kinds of new opportunities for fintech innovation. We've seen the power of that in India with UPI. The same thing is happening here, and I think the entrepreneurs, the investors see that opportunity, and we're seeing a lot of growth for that reason. The last thing I'd say is just the incredible talent base, the entrepreneurial ecosystems across Brazil, Mexico, across the region, Argentina, really create opportunities that investors are excited about. So these are, typically not first-time founders. We're seeing entrepreneurs who've been part of the big success stories and now building new things, or, who've coming out of big corporates, financial institutions. All of that creates really a vibrant ecosystem that's growing.
So, besides idiosyncratic characteristics such as the local talent that I agree, sometimes local talent performs equal or even better than before because they are more hungry, they are looking for new things, they want to show up their new technologies. There is also the opportunities of underserved markets locally, that we have a lower penetration of credit cards, we have a gap on financial education, we have a lot of opportunities to explore that in other more mature markets are already gone. But on top of it, we have also a mindset of how investors see this type of investments. We came from a trend up to 2021 where you can scale at all costs to show volume, to show clients, to show big numbers in terms of multiples, and then you raise big money. For the appetite totally changing for sustainable, unit economics, healthy, and how you prove your business can survive without the necessity of the money. The money as a tool for scale, not a tool anymore to grow your business at any cost. And this just mindset changes everything, because then in times of turbulence, in times of how investors see appetite to put their money in, they're going to look for the companies that are showing more resilience, that's showing that they have good and healthy unit economics. Is a shift towards quality in terms of quantity.
Yeah, and let's talk about like the evolution of fintechs. When we think it first started to solve problems that the banking system was not addressing and using technology to do that. But now banks are becoming are paying attention to things that fintechs are doing, and somehow fintechs are also being more sophisticated. So we have a scenario where fintechs are looking like banks and banks are looking like fintechs. From fintech founders' perspective, is this competition with big institutional being a challenge for you guys, or do you see there is opportunity to grow there?
So I think there's a little bit of everything. When we started, there was a clear cut, like this is a fintech, this is a bank. We're both competing, but there was a clear cut. I think Revolut is a great example. They're going after, you can tell, like 20 bank licenses. So probably Revolut was a clear fintech. Now it's probably going to be the biggest bank of all. So that line is getting blurred. Also, when we started at Pomelo, the conversation we were having with banks were very different from the conversation we're having with fintechs. Now they're not different at all. Banks are going after the same product, the same experience. Some banks are also innovating at a speed very compared to fintech. Some are not. Those will be dead. But some are really, really catching up. So I would say that line is gone. Fintechs and banks are all over the place. And for collaboration, there's always opportunities. Pomelo ourselves, we provide services to banks. So there's a way of fintechs providing technology to banks. There are multiple fintechs that are providing different services to banks, and that I think is a great opportunity. But again, I don't even think talking about banks and fintechs is going to have any sense in a couple of years. It's all technology companies doing financial services all over the place.
So to add on once, because he mentioned why we are doing so many bank licenses everywhere globally. It's because clear and simple strategy. Before, fintechs try to overcome regulatory environments in order to become a regulatory exception, grow faster, and become something new. Experience shows that now, what brings confidence to investors, what brings confidence to clients, and what brings your comfort that you are complying with everything that's needed is exactly the opposite. You become regulatory priority. What was nice to have, now is a must-have. It's a core value to show that your company is well-structured and well-compliant in order to grow safely, to bring this comfort to investors, to clients, and to everything. And it was learned by doing, but once you learn how to do it at scale, then this is the secret source to grow and to become a real global bank. It's not anymore global financial institution trying to localize products. It's a local bank, fully regulated, leveraging a global scale and to deliver these benefits to clients.
Amee, I want your perspective on what are investors looking for right now? Because we have a lot of problems that are already being solved, but what hasn't been solved yet?
Yes, yeah, it's a great question. We touched on a big part of it already, right? I mean, the days of 2021, growth at all costs are behind us. You know, every investor, even at a seed stage, you know, we don't expect profitability when we invest, but we expect there's a mindset to get to profitability. There is a clear cut, you know, I remember in 2021 asking entrepreneurs, okay, how do you think about your unit economics? And there wasn't that thinking. And now, even at the seed stage, they say, here's how we're getting there. Here's how we're thinking about B2B channels to help us, you know, lower our acquisition costs. Here's how we're thinking about partnerships. And so I think there's more and more expectation around that. There's also just a higher bar for Series A investors. You know, what used to be 1 million in ARR has now gone up to 3 to 5 million, and I think that continues for later rounds. So investors are being choosier, they're being more selective, and their bars are higher. And so what that just means is that from day one, you know, there's a focused mindset for a lot of entrepreneurs of saying, what is the problem I want to solve? How do I get to the next set of milestones to achieve that kind of those goals, and then executing. I think investors are also looking for experienced entrepreneurs who can handle, and I know we'll talk about this, but just the uncertainty that is rampant in the global economy right now. So entrepreneurs who sort of have either been through that or can think through how their model will be resilient to the shocks that we will see.
in the coming months.
Yeah. We are in 2025. I wanted to know, like, what are the trends at the moment that you think have a case in fintech? What is exciting you guys about the market right now?
So for long, fintechs try to build super apps, like to attend everybody in a single place. And there's still demand for that. But also, it have increased the verticalization and the needs of very customized service for a specific topic. So instead of choosing one or another, you have to attend it all. Like you have to be ready, build a technology capable to do both. You have single place where clients can access, easy access, cheap, safe, security, fast, everything they need to solve their daily finances. But when they need and want specialized products, bigger volumes, or specialists, they also can access it. So there is a hybrid model where you can build a platform when you serve clients with everything, one single app to solve all financial problems, together with spin-offs of this in specialized verticals that you can use new technologies such as AI, new fraud prevention activities, or listening properly to the big data of clients, learn with that, and then adapt for the very specific niche. To give you practical examples, we still have an app that is serve clients on niche products such as cross-border accounts, local needs such as Pix, boletos, and payments in the daily basis, debit card, benefits of the credit card within the debit card, because clients not necessarily want to be dependent of a credit line in order to get the benefits, so you have to serve the clients anyway, but also have launched many of specialized apps, like specific apps for trading, specific apps for crypto, a vertical for crypto exchange, a vertical for other things, meaning we serve all clients through a single platform that's scalable, sustainable, good unit economics, and don't need to choose one or another. We just do both.
Yeah. I think similar to that, it's the whole embedded finance trend, which is not new, but I think we're starting a new, I would say, embedded finance with a twist. 2021, another thing that was really hot in finance was that every company could do fintech. So doesn't matter what your industry was, there was always a fintech layer you can add. I think that's true potentially, but there has been in the last couple of years a lot of companies going after this with not exactly the good strategy or strong enough. Doing financial services is hard. If your core business is something completely different, there's a big chance you will fail unless you do it. So we see in Latin America a couple of good examples of embedded finance, especially, I'll say, in retail, some marketplaces, but we see a lot of money spent in projects that were completely wasted. So I think embedded finance is still a very strong trend, but it needs to be taken very seriously. Before 2021, any company thought, okay, I'm going to build a 5-people team and launch a fintech because I have a lot of customers. That doesn't work. Doing fintech, doing financial services is hard. You need good teams, you need specialized, and you need to invest. And if it's a little bit far from your core business, for some companies have proven challenges. So I still think the embedded finance verticalization is going to be strong, but more selective. Only for the brave, I will say, that really wanna go after it.
Yeah, and I would just add, I mean, I think absolutely, embedded finance almost isn't like a sector of fintech anymore. It's just how we're going to talk about financial services. But I think there's more and more a question of, look, am I building this myself, or am I building the platform, and then I'll partner with other players who will help me do payments, insurance, credit in the future. We're really excited about embedded finance and what we're calling kind of the real sectors, right? Construction, logistics, agriculture, which are very manual, very kind of, they're dying for automation, and whether that's software or marketplaces. I think there's and there's a long tail of players, of small businesses that engage in that sector. I think there's real power to digitize and then bring on payments, bring on credit, obviously with time when it comes to the right point. And then AI. AI is a big, I think there's tremendous opportunity there. We are seeing, as the days progress, more and more use cases relevant in fintech for actually kind of lowering the costs, increasing reach, making a better customer experience for fintech companies. So I'm really excited about what we see there.
Yeah, and if I can add something on that, we're talking about spaces where Latin America banks have failed. Embedded finance B2B, especially in B2B, like agro, banks have failed miserably, and they're still failing. And I don't think fintechs have even solved that yet. So I think the B2B space in financial services, especially long-tail SME, still blue space. A lot of people are going after it, really good companies, but I don't see anyone dominated. And I think there's space for many companies solving this problem. So that's still very hard in LATAM.
That's a good tip for founders here. So let's talk about how companies are trying to evolve their business right now, right? We have fintechs in different stages. We have fintechs that are looking for the first round of investments now, but we also have companies that got that money back in 2021 and already have a consolidated business, but are trying to figure it out how to reach that next level. So can you guys give us a perspective of how your companies are dealing with this challenge right now? Can we start with you?
Sure. So it's from the top to the details, right? First of all, you have to adapt for what clients want and what investor wants. You need to converge these both ideas. And as I mentioned before, it's not scale at any cost anymore, but more about how you build a strong balance sheet with sustainable growth. It's more about sustainable innovation instead of hype, right? You need to bring products in a well-diversified revenue streams, capable to navigate difficult times independent of what's happening. Like, it's about resilience in the business. So, for example, at the moment, we do have a very, say, volatile market. We have tariffs fights. We have many things that we can't control ourselves. But we can control how we respond to that and how we build our balance sheets for this. So instead of investing a lot in growing clients at any cost, doing performance marketing, etc., why not focusing on get a more engaged client, using properly your platform, make sure activation and retention are the drivers of your decision and not anymore the numbers you're going to show to the market. And the facts shows that it pay off, because then you present strong balance sheet, you present good revenue streams, well diversified, not only by product but also geographically. And then clients are, say, confident that you have a safer place to put their money. Investors are happy because they can recognize a proper cash flow happening in your company and how you're going to respond for difficult markets. And at the end, what even before was like competitive blockers such as being regulated in so many places became your competitive advantage. Because let's take a different example to show the case. Why Formula One drivers invest, or racers invest so much in good brakes? It's not to stop the car. It's to be able to move faster and use the brakes when you need it. And regulation works like that. They also impose you limits on how you can operate in order to build things faster, but then you can control properly. This altogether, the cost is hard to implement, but once you do, then clients feel safer, investors feel safer, and then you have a resilient business to navigate these times independent of what happened on the macro level.
Where's your perspective on that?
Yeah, so at Pomelo, we are on a different stage. A year ago, we closed our Series B. So far, we raised $100 million. And I'd say we're in a scale-up stage. And as a scale-up company, what we need to do is continue growing. On our stage, this whole going only to profitability is not really a thing. You need to have profitable growth. Profitable only is not enough. You need to be profitable and grow a lot. So we're right in that stage. The way we're doing this is Pomelo started building cards for fintech. That was a start. But now the way we're scaling is we're building cards for everyone. And that includes banks, biggest banks of the region like Itaú, Bancolombia are already working for Pomelo. So what we're seeing is we need to cover the whole spectrum, and that will make us a scale-up company, a company that can grow and maybe be the size of Revolut soon.
Yeah. I mean, can you give us some perspective of exit strategies that fintechs are using right now? Do you think that IPO is becoming something that the companies are not looking for that much? Like we're seeing a lot of MEAs deals instead of going public. How are the companies trying to give returns for the investors?
Yeah, I mean, I think particularly, we've seen in the last few months a number of U.S. fintech companies delay their, move to going public. I think we're seeing public markets, lots of challenges in the public markets. So it's also a good time for, exploring the other options. And we did see toward the end of last year increases in M&A activity. So that is something we always are talking with our companies about exploring what those options could be. Even in the region, we've seen in the last, 18 months, some pretty powerful M&A, deals happen. Fismo got bought by Visa. We saw Covey getting bought by Move. So they're interesting sources of M&A activity. It's not just locally from financial institutions. We're seeing global corporates. We're seeing other emerging market players entering. And so I think M&A is where we see more and more exit opportunities coming in the future. We expect to see this year more of that activity continue.
Okay, so our time is running up. Can you guys give us, the founders that are here, a piece of advice of how they can grow their fintechs? What should they keep in mind?
So, building on what Amee just said, IPO is more an optionality than a mandatory exit anymore. Like secondary markets, M&As are opportunities. So if I could give an advice for founders, it would be build the optionality, because if you have profitable growth, it unlocks capital, not the hype. So build your balance sheet, build your strong growth, because then the capital comes. Would be through an IPO or through a secondary market or any other type of private investment.
So I will say a very basic one. Think of a big problem that's going in Latin America and try to solve it. But the main thing, and I see this failing a lot in some founders, is think really big. Like if you want to build something that's going to transform Latin America, you cannot think in one country, you cannot think in two. Think about something that will solve something for many countries, for all Latin America, or maybe global. That's the way you build something great in Latin America, thinking really big.
Amee?
I think it's a marathon, not a sprint. So making sure as you're raising money, you're thinking about how that's helping you, again, achieve the next set of milestones to raise that next round, and thinking kind of strategically as you grow rather than, burning a lot in the beginning and then running out without kind of knowing where you're going next. So marathon, not a sprint.
Awesome. Thank you so much for the insights you gave us today. Thank you guys for being here with us. Thanks.